Welcome back, I'm Darren McDermott and you're watching Dukascopy TV. Well, we had two major economic events last week, so let's find out how the markets are performing this week. I'm joined by Jean-François from MJT. Welcome back.
Hi Dorian.
So looking at the markets now after the ECB meeting, we saw a back and forth spike. This then prompted a sell-off. And of course, could this actually lead to a reversal?
Okay, well, we're going to start with euro-dollar. I think it is quite interesting at the moment. Just to recap what we have on the screen, this is our fingraphs.com website. This is a private list we do for this Dukascopy show. On it we have a euro-dollar, cable, Australian dollar, gold, dollar Swiss, dollar yen, S&P futures and treasury bond futures. So let's start with the euro, and we'll click here on what we call an investor's view. It's a combination of a long-term weekly chart, a medium-term daily chart, and a short-term hourly chart. And what we try to put forward at Fingraphs is that you want to get a first opinion at a glance. And so in a matter of minutes, you could see that our long-term, it's still heading up. It's the weekly is still in a bull. If you click on it, you have a positive price projection, and you're also in a bull here. Our daily, and I have to get back to here. Our daily is still in a bull and still heading up, although the price projection has been fulfilled. And hence, over the last few weeks, we have been signaling that it's come to an exhaustion, and we should at least await a period of a consolidation or correction on the euro. It was pretty much capped to the upside, and we didn't see very much potential into it. And then we could also note that our risk index, which is a price oscillator, is well in the red, well in the overbought, and it's starting to turn. So that may confirm a period of correction consolidation to come. Now we're talking outright reversal at this stage. I'd say it's a bit premature. Basically, a lot of speculation on what the ECB is going to do. Now the big question is, can it do much? I mean, its mandate, it's not to influence foreign exchange rates too much. It can try to talk the euro down, but it hasn't worked very much up to now. It can lower interest rates, but it doesn't have that much leeway to do so. It's already at 0.25. It may do some quantitative easing, but it doesn't have that much of the means to do it in terms of regulatory. So I think it's mostly a fact, like what we've been toning in the US over the last few weeks, that at the moment growth in Europe is decent, and it's showing signs of a pickup. So if that continues, the euro should continue to be quite bidful. Now, what could change is that if growth rate could accelerate in the US and bring a differential there, but we're not there yet. So at the moment, obviously, we do believe that the euro is in an exhaustion phase. It is entering a consolidation or correction period. Now, are we seeing a larger sell-off ahead? It's a bit too early to say. However, over the shorter term, the hourly charts have reacted down and have made it past what we call corrective targets. As long as you're in corrective targets, it means that you could only consider the move as an intermediate phase. Once it moves impulsive, as it has here, it does bring a bit more strength to it and does cast into down the daily a bit more. So here, our impulsive targets are heading down. There's probably 1 or 2 weeks of this down move to go, and the targets are within the range of 136.27 to 137. So there's a bit of downside there. Now, do I call this an outright major reversal? It's much too early to say yet. Now, let's focus on other assets, and let's look at equities. Well, we've been bullish on equities for a long time. We've been stressing recently that we're getting to very expensive levels because our projection here is what we call impulsive 2, so it's the maximum bullish projection that we can have, and we're not very far from it. Our risk index is well in the red, and we do see our envelopes touching each other, which is a sign that the short-term trend has gone too quickly in respect to the longer-term trend. On the daily, similar situation as with the euro. Targets are exhausted, it's still heading up, but there's quite a lot of stress here, and our risk index is also in the red. Over the short term, we've entered a correction, but it's only a correction for now, and it does seem to tell us, given this long flat rectangle, triangle here, that we might see one last breakout to the upside. And that would probably be our favorite scenario, is that we have one last attempt to go to 1900, and then over the next few weeks we slowly reverse down in what, I mean, you're still in a bull, in what could be a consolidation period. Also here, we're not, it's much too early to call a major reversal yet, but several months of sideways down consolidation would be quite plausible. Now, I'll focus on gold quite quickly, as we do every week.
Of course.
And,
will we see gold is suffering? Will we see it pick up?
Well, basically, again, we've been bearish for quite some time. Our long-term charts on the weekly are still negative and also still show a few more quarters to go. Our risk index is well in the green, but it's not synchronized with any market stress indicator here. So it is oversold, but it should have some more downside potential over the next few quarters, at least until the end of the year. Now, we've attempted quite a nice a pickup since December. We've made a first top in March. The consolidation is lingering on, and we would really expect that the price over the next few weeks moves back up aggressively if we want to see anything else than this mere correction that happened during December and March. So envelopes have turned down again. We're in bearish mode again. So if we don't see this pickup soon, we're seeing a resumed downtrend in line with what we see on the weeklies here. And a hint to something positive happening on gold would be if you could create an impulsive price target here. If you see, these are corrective targets. So we've moved up into this correction zone. We really would need to go above to create anything meaningful. So the upper end of the range stands at 13.1641. We'd really need to move above these levels to give a chance to gold to reaccelerate in an uptrend. At the moment, it has been failing to do so over the last few weeks. So I'd be quite prudent at this stage. Now, maybe one last one. Interest rates are with the 30-year bond Treasury futures. If Yellen wants to normalize the interest rate curve, you would naturally see some inflation and growth expectations come in, and you would see interest rates also starting to rise or rising again, which they already had a bit with tapering last year. And as you could see on the weeklies, we had been in a consolidation down, but it is resume uptrend at the moment. It seems like the bullish trend on bonds has been reinstated. So we really would need to see some weakness here to validate growth in the US. And at the moment, it's not happening. So as long as growth in Europe stays decent and growth in the US doesn't accelerate, it seems like the euro is still well bid for.
Jean-François, thank you very much.
Thank you.
Well, make sure you join me and Jean-François again next week. But in the meantime, have a look at all our daily interviews. See you soon.